Hi everybody, hope you're well, hope you're fantastic. My name is Gavin. Now today I want to talk about the power of refinancing when it comes to property. Now I'm sure that maybe you've been asking yourself, what is this refinancing all about when it comes to property? So I'll be breaking it down just for you. Now firstly, let's start defining what is refinancing. Now, refinancing is where now you trade your current mortgage bond for a newer one with different terms. So meaning that you already have a mortgage bond. So you saw this property that you like, but maybe you didn't have the cash to buy it, or you just simply wanted to leverage using other people's money. So it means that you went to the bank. So I'm going to use the bank as a point of reference for this video. So you went to the bank to apply for a loan, which was successful, and now you do have your property and you are now paying a monthly repayment over to the bank, right? So you do have this mortgage bond. However, you want to now renegotiate the terms of this bond or home loan that you have, right? But now, under what circumstances would you now go and renegotiate the terms of the bond? Now, I'm going to be touching on three main types of refinancing that one can make, right? The first one is when now you go back to the bank and renegotiate the term of the loan. So you are refinancing the term of the loan, right? So you are refinancing on the term of the loan. All right. But why would you do that? Why would you go back to the bank and refinance and renegotiate the term of the loan? Let's say that when you went and bought this property, they gave you 20 years in terms of when you should be able to repay, the entire amount. But then you discovered, no, man, I can actually take a 30-year bond and be able to pay less in terms of my installment, even though my interest is higher, right? Because if now my loan term is lower, I pay more, but my interest is low. But now, personally, I normally advise that people take the longest term that they can get when they are now financing their properties via the bank. Now, I'm going to be making a video, right, to explain myself exactly why I say that. But basically, you can do that. So you can move from 30 years to 20 years, or you can move from 20 years to 30 years, because there is, changes that will happen, especially when it comes to now the repayment aspect and the interest that you are going to pay, right? So that's the first one, where now you can go back and renegotiate the term of the loan. The second one is where now we refinancing on equity. So we are refinancing on equity. All right. So what does this mean? This means that let's say over the years you have had this property, you have had this mortgage bond for many years, and you have paid in that mortgage bond for all these years, right? You didn't close it. Maybe you have an installment, an outstanding installment of 20,000, right? Then you decide, no, man, I can use this current bond that I have to basically buy another property. And maybe this property that I bought was for primary use, but now I can use this, this leverage that I have to get money so that I can buy another property for investment, for example. So then you go back to your bank and say, bank, I've been a good customer. I paid you all this money over the years. I want to then refinance. I want to get money out of this, loan facility, whatever the case might be. So I want to refinance whatever that I've paid over the years. So can you give me a bond on this facility? And then the bank checks everything else. They look at your affordability and say, no, Gavin, you do qualify. So we're going to give you 700,000, and boom, I have 700,000. I go and buy another property cash, and then it's for investment. There is a tenant that's paying rent. Now the tenant is now helping me now to service this bond that I have. Remember, on the other side, I don't have a bond because it's cash. So they are now helping me to service this bond, and maybe I'm getting some surplus out of that, right? So I can do that. So a lot of the times people don't realize that they're sitting with money. You have equity in this property that you have that you're not really utilizing, right? So maybe you can go in refinancing, utilize it so that you can multiply and have more properties that can generate money for you. So that's exactly what it is, where now you're refinancing on equity. So it's money that has been paid in over time. You'll find it even paying extra into it, and basically you're now borrowing against that facility so that you can get money cash and you're able to buy another property cash, and then be able to now maybe do it as an investment property. So that's number 2, refinancing on equity. And then the third one is where now you're refinancing on capital appreciation. So you are refinancing on capital appreciation. So what does this mean? So let me make an example. So initially I went to the bank. So remember, all these scenarios, you do have a loan with the bank. So you do have this property, right? So let's say now I went to the bank to finance this property for 100,000. So this was 2 years ago. All right. So this is my current bond. So it's 100,000. So I'm servicing this 100,000. But 2 years later, my property is now worth 200,000. So the market value is now 200,000. Okay? So it means that my property has increased in value by 100,000. Right? So, but remember that my current mortgage bond is 100,000. So now my current market value is now 200,000. So then I go back to the bank and say, bank, I want to borrow against this increase in value of my property, right? So I want this 100,000. So please give me more money, basically. So the bank, they look at the valuation, they say, no, we are good. It's now worth 200,000. So we're going to give you a further 100,000, all right? So meaning that now my current bond, right, it's going to now be replaced by an additional 100, or it's going to increase by an additional 100,000, which now takes now, after I've got the money, because I'm going to get the 100,000 cash, right? So now meaning that my bond now, my current bond now, after the 100,000 has been borrowed to me, it's now 200,000 rand, all right? So then I take the 100,000, let's say I go and buy property number 2 for cash, and then through that it's for investment, and then the tenant is paying rent, and then this rent now helps me to service this 200,000 bond that I currently have now. So you can basically do that. You know, a lot of times people don't realize, again, that they have equity. You know, over the years, the property has increased in value. So you do have equity there. So you can then refinance, go back to the bank and get a further bond. So that's another word for it. It's a further bond, because initially your bond was 100,000, but now the value of your property is 200,000. So you borrow against the 100,000 that is increased in the value. So that means that you can take that 100,000 and you can pretty much go and buy another property. You can finance your children's, higher learning, whatever the case might be. But this can actually help you to then generate more money. You know, you can get more assets that can generate more money in that regard. So you can use all of that. So again, refinancing is when you have a current mortgage bond, you have a current home loan, but you go back to the bank and you go and change the terms of that loan. And that's exactly what it is. So number 1 is when you change the term of the loan, you renegotiate on the term of the loan. Number 2, you renegotiate on what you have paid into that home loan. And number 3, you are renegotiating on the basis that the property that you have has increased in value and you want to now suck out that equity, so to speak. I hope this definitely assists you. Yeah, so just leave a comment below. And if you then, still have some questions, or you do have a comment, whatever the case might be, please do that. And don't forget to then subscribe to my YouTube channel. So press on that red button below and subscribe, and then please share as much as you can with regards to these videos. So again, Gavin Mkabela, I'm signing out. See you on the flip side.